So, hello everyone. I am so excited about tonight's call. And I'm also so fired up about all the recognition that I have to talk about. So, Ryan Greiser from Opulus Financial is going to join us, and I will introduce him in 1 minute. But in the meantime, I want to quickly just honor, as we do every week, I want to honor some unbelievable people and some amazing accomplishments from last week. And so let's just really dive into that. So first of all, I want to honor Crystal Manager Maureen Matson, amazing. Consultants Danielle Hannigan, Wendy Worthington Black, Tiffany Sprang, Danielle Inkster, 5-cycle bonus, Jen Vanden Elzen, Crystal Director, Anna Andreasen, Crystal Managers, Jamie Jo Durham, Katie Ho, Felicia Dufresne, Lindy Sharon, Diana Suyag. Amazing, you guys. That is huge. Top enrollers, Holly Kirsch, Jen Bjorndal, Emily Cranston, Jen Vanden Elzen, Maureen Matson, Mary DeCorn, Danielle Hannigan, Sandra Castaneos, Chastity Nicholson, Janelle Klassen, Michelle Mixowitz, Deb King, Katie Flanagan, Ann White, Jill Zaneker, Paris Granger, Kim Eller, Giovanna Villarreal, Janet Wisniewski, Brandy Brokaw, and Sheila Ressler. Guys, those were from 3 to 5 enrollments last week. On the Dreamers in Action team, new consultant Tara Patton, top enrollers. Look at this list: Jenny Thompson, Emily Sutherland, Tara Overball, Tara Patton, Laura Laurie, Kisa Maxwell, April Deemer, Donald Eby, Kathy Dreddick, Diana Schwinghammer, Kimberly Kirkpatrick, Lindsay, Rameshwar, I'm going to say this incorrectly, Rameshwar Quillawan, Kathy Rowland, Kimberly Howe, Gavin Powers, Jesse Mitchell. Guys, this is an absolutely awesome representation that I will just tell you. Lots of people, summer is winding down, kids are going back to school, people take their foot off the gas. Not you. Not you. It's not the time. I will tell you, just as we're going to talk with a man that really understands trends. I want to tell you, I don't know a lot about the financial trends like he does, but I will tell you one trend I know is that people that stay in action in this time period of the year set themselves up already for next year, because it's called a funnel. You have a 6-month funnel, a 3-month funnel. What you do right now will change the income that you earn in 2022, which I will tell you leads me to introduce our guest. So Ryan Greiser, I'm going to tell you, I was going to read a little bit about his bio, but I'm just going to tell you from a personal note. Ryan is someone who's known Doug and I, my husband and I, since probably we were first married. We've known Ryan for a really long time. He's watched me in corporate America. He absolutely, has known my husband through his being an education, being a principal, being a coach, doing all these kinds of things. And I'll tell you, what's most pertinent to this, people ask me, what does your financial advisor, what do accountants, what do people that really understand business, finance, planning, what do they think about network marketing? Well, I'm here to tell you that I'm going to introduce Ryan, because as he's watched us sort of grow up, we've watched the same thing. For him to establish his own company, he's a sought after person. I'll tell you, I interviewed a lot of people when I was looking for an advisor, but I'll tell you what's so particularly fabulous about him is he gets down and dirty. He changed our financial life in so many ways. If you know me, if you've ever watched some of the things that we've done, he's changed it dramatically. Also say he represents some of, Philadelphia professional athletes, people that are really looking for wealth growth. And he's really helped one of the people I consider a sister, really just eliminate all of her debt. She's been so thrilled. So this is not, I'm going to disclaim this before I really bring Ryan on, but I want to tell you, this is not an endorsement or a commercial, but Ryan offers real value. And him and I were talking the other day, and I said, people on my team need to know this because you guys have a real business. So without further ado, Ryan, I want to just introduce you to our teams here.
Yeah.
Ryan Greiser.
Jess, thanks so much for having me. And first of all, it sounds like you guys got an awesome momentum, right? Going through the summer, being part of a lot of sales organizations. I know everything just hits the wall around this time of the year. So first of all, congrats, and excited to, dive into a conversation right with you guys tonight and hopefully, bring you some value.
So, Ryan, I think one of the things that really would be a great place to start is just kind of how you've watched this industry. You've watched us in this
Yeah.
industry, and what your perspective on it has been.
Yeah, well, I think like in a macro level, right, what we've seen across all of our clients and just talking to a lot of people, especially through the pandemic, there's been a huge shift, right, from corporate America punching in 9 to 5. And it's not so much a matter of how will you earn income, right, being self-employed or doing your passion work or what outside of your place of work, but it's how much will you do. Right, there's an article that Forbes just released is that 30% of America, a third, have some sort of self-employment income, right? Where 5 years ago it was only about 5 to 10%. So we've seen this massive trend with the adoption of technology, Zoom, great network marketing companies that are producing really strong and good products. Because I know, Jess, you've seen them out there where they're doing the model, but they're shit products, right? That's not going to work, no matter how talented you are. But people that are really going in this direction to either start a passion project or join a company where they can really get behind and make some extra money on the side to get started. And that's the other thing. Like with what I love about network marketing, it's such a low risk if you're looking to produce extra income, right? Like worst case, you spend some money, you spend some time doing it, and it just doesn't work out. You go back to your 9 to 5. Like 5, 10, 15, 20 years ago, if you want to start your own business, you got to go get a loan for a bank for a couple $100,000, go find a leasing space down on Main Street somewhere. And it was a huge financial risk, even putting up the mortgage to your house to start that business. So what I love on a macro level about the world today is you can start your own business and get out of something that maybe you don't like or doesn't fire you up as much, and even just get into something to dipping your toes in the water to see if something can work to create a better life for your family and for your future. Obviously, like you and Doug did. I was just thinking the other day, I saw you post a picture of the kids going to school today. Yeah. Right. And I was thinking about us at the gym together like 10, 12 years ago with the twins. You're sitting there, watching your workout. And it's just crazy to see you get your workout in before you went to work, before you drop them off at daycare, and then go into your corporate job and, kind of seeing that transformation in your life over the last 10, 12 years. It's really been, amazing to watch.
Well, I think you make a great point. Low risk, low barrier to entry. The worst case scenario in Isagenix is you get access to great products. If this doesn't work out, and their money back guarantee. So I think that's a great point. So a lot of people on this call, and there are people that maybe they've just gotten started, maybe they're making enough to just pay for products every month, to all the way across the continuum of people that are making jaw-dropping, unbelievable income here, replaced or tripled full-time incomes. And I think what people would love to hear from you is, we're 1099, as you know, we do our own taxes. When should people start really considering this a business and be making these kinds of decisions that you're looking at with people?
Well, what the IRS would say is the first paycheck that you get as a self-employed individual, you're a sole proprietor, you have your own business, you need to file taxes in a certain way. So really from day one, right, you need to identify that you got income coming in, right, and that's not part of your employer's wages. Is really from day one is when you should really start considering thinking about how you're running yourself financially from a business perspective.
And so talk to that. So what are some of the things you'd say, you're okay, I'm starting out, I'm a business, I'm serious, I'm doing this, I'm going to make money. What should people be considering?
Yeah. So the first thing is making sure you understand how the IRS views you, right? So the IRS will view you as a sole proprietor. What that means is just you're an individual that's representing a company. They're paying you commissions or on a bonus structure, but they're sending you compensation in some way, shape, or form. And as you mentioned, Jess, if you're a sole proprietor, as an individual, that's going to show up as a 1099, what you're going to get. So here's what's super critical to know is that unlike your 9 to 5 or the salary that you're getting from a company, that company will obviously withhold taxes on your behalf through the payroll system. They'll also pay a portion of your Social Security and Medicare taxes as well to make sure you're set up for the future. As a 1099 individual, those things are not happening. So what you need to be aware of that the IRS wants to make sure that you're paying your taxes in a timely manner above and in addition to your W-2 income or your payroll that you're getting through your company. But you also have to pay Social Security and Medicare taxes on top of that as well. So there's a few key tax considerations, because here's what we see all the time. People jump into a position, they're getting paid 1099, they're hustling, they're grinding, they're doing great. Tax time rolls around, and now they realize they didn't quite hold back enough to pay their taxes. If you don't pay your taxes on a quarterly basis as you earn your income, the IRS is also going to assess you some penalties for not paying in a timely manner. Think about it this way, right? The IRS says, hey, we want to get money on a regular basis. And if you don't pay them throughout the course of the year for your 1099 income, they assess you a late payment penalty, what you should have paid them 3 months, 6 months, 9 months ago, right, on those items. So understanding that you owe the IRS taxes for your 1099 income, and it's critical that you get them calculated or at least estimated in some way, shape, or form, because 90% of the self-employed individuals we work with in their first year, they're shocked by the tax bill, and they're also usually getting assessed some late penalties and fees. And it's something that's absolutely avoidable if you take the time to look into it a little bit and or consult someone about it, obviously, to make sure you're in the right position for yourselves.
So there's a lot of benefits, right? You see
100%.
a tripling of the people that have started home-based businesses. Will you just talk really quick before we dive into really setting that up? But what are some of the advantages that you've seen to people? Why are so many more people jumping into home-based businesses from a financial perspective?
Yeah, right. So that was all the bad stuff, right? The stuff that we see that you can easily avoid, but there's so many great benefits, right? I'm gonna stay away from the stuff, the soft stuff, right, so to speak. Like besides just spending time for me, right? I'm in a home-based business, right, for myself, and I made that shift for similar reasons. I'm offering something slightly different, but besides being around the kids and all that other fun stuff, there's a ton of financial benefits that you can have as well, in terms of making sure that you're also taking advantage of the tax code of what the IRS allows you to do compared to the burden that they give you. So you get to deduct and write off so many great expenses that a lot of people do not take advantage of when it comes to just being a sole proprietor, getting started, and understanding what you actually can deduct. And the IRS easily listed out for us on what they call the Schedule C, which is the profit and loss from a business that's there.
That's a fun thing to think about, is the things that we can actually deduct. And I know a lot of people that make a lot of money that say, like, having a home-based business is brilliant because we can write off our portion of our home office, have a vehicle in the business name. So will you talk to just a couple of those things that people might not realize that are actually legitimate write-offs?
Yeah, for sure. And Jess, can I actually share my screen because this will be a good visual? Is that cool?
Yeah, you can. I just need to make you a co-host, I think.
Yes, as you're doing that. So, and if you guys want to write this down, perfect, here we go. So if you just want to write this down, just Google Schedule C, profit or loss from a business, right? The IRS lists all of this out here for us. So what you would get, right? And by the way, I'm not an accountant, right? So this is not tax or legal advice on this. So I know enough about the stuff to be dangerous and what you need to do, but consult, your individual accountant for this. So your income that you get, right? Your 1099 will show up on line 1 here, gross receipts from sales, right? That's where the paychecks that you get from Isogenics or any other self-employment income that you have coming in would roll through. So here in part 2, 8 through 27, the IRS explicitly lists out everything that you are entitled to deduct that is used for business purposes. Now, keep in mind, things that are on here, you would not be able to deduct, driving from your home to your kid's school, or going out to dinner or things of that nature. But this would be items that are exclusively used for your business purposes. So for example, if you're driving to a conference from your home, and you're going from home to an airport, that could be used as a car and truck expense, specifically the miles in which you have driven. So the IRS allows a certain dollar per mile you have driven to deduct that off of your income. I know that in my prior business where I was a 1099 individual, I got to write off about $10,000 or $15,000 worth of my income just because of how much I drove around, the greater Philadelphia area. So that took my taxable income from, call it 100 grand down to $75,000 just because I kept track of the amount of miles that I drove. Something else that's common on here that a lot of people don't realize is home office expense. So for example, if you have a home office in your home, obviously that's exclusively used for business purposes. This isn't like, a desk in your room or the dining room table. Those things do not count. The IRS does not like that. But if you do have a separate and distinct office inside of your house, or a portion in a room that is clearly and exclusively used for business purposes, you get to deduct that office expense. Well, but if you say, obviously, you're not paying yourself for that office expense. So the way that the IRS calculates this is they have a basic deduction where you can just call it up to $500 or $1,000 and expense that. Or you could take a portion of everything that you pay for your home and deduct that by the square footage of that office related to your home. So let me explain this. Let's just say you have a 2,000 square foot home, and for easy numbers, you have a 500 square foot office, a quarter of your home. So what that means is you get to deduct a quarter of your mortgage. You would get to deduct a quarter of your utility bills, water, electric, sewer. You can also deduct phone, cable, internet, everything that is included in your office expenses. If 25% of your home represents your office, it's 25% of everything that you're utilizing to power and run and operate that office. And we can kind of go right on down the list here. But those are the things that are often overlooked. One, just because people don't keep track of them, or two, they're not even aware of that they have the ability to deduct some of these items that are on there. And ultimately, you're paying the IRS more money than you really need to be doing it, especially as you're getting started off. This expense section is critical and crucial to take advantage of.
Ryan, best advice for tracking these things. Well, is there an app, or what did you do in your previous?
Yeah, so a few things. Generally QuickBooks, right? When we look at just tracking general expenses, is the easiest one that's out there, because it does provide this structure and this setup right for you, where you connect. Well, let me back up. One thing we would absolutely advise keep track of this is have a separate card, a separate bank account, distinguish and separate your personal expenses and income from your business expenses and income. So that's kind of thing number one. So that as you go through all the expenses that you have, they really should be on one card, or be run through one bank account or one checkbook that's separate and distinct from your personal items that are there, right? So once you have that, QuickBooks has a specific version of QuickBooks for self-employed individuals that I literally think it's like 15 or 20 bucks a month, something like that. And it is specifically designed to give you tips and tricks to outline this stuff, to make sure you're tracking everything to maximize your deductions. And QuickBooks also has specifically then for like your car expenses, like the number one thing you really can't track through a bank account. There is a mileage tracker that's on there as well that pretty much tracks your location, where you're at, and then you can categorize your trips accordingly. And that's great proof if you ever were to get audited from the IRS that, hey, these trips were real, my phone was tracking me. I was giving QuickBooks the ability to make sure I was tracking my drives accordingly. So one, separate accounts for business and personal. Two, a program like QuickBooks, if you're not savvy in Excel, right, or you can't export things into Google Sheets and categorize them, QuickBooks is well worth the 15 or 20 bucks a month to have. And then QuickBooks also has an app for that. But there's the other mileage tracking apps that are out there. It's easy to Google, see which one you prefer and what's best. And there's other accounting softwares that are out there too, like Xero, or Bench Bookkeeping has another great expense tracking tool that's out there. But personally, I used QuickBooks, loved it. I still use it today for everything that I do, just because it's simple, it's easy, and it's exactly what the IRS is allowing me to do.
I know Lauren Frierson, if for people who have her as a leader, I know that she is a big fan of having gotten a bookkeeper. She was telling me that we talked. Does that bookkeeper really change the game for her? That's a person who can really manage that? Ryan, one question, I'm just looking at the chat. So one
Yeah.
question that like, there's a number of people here who also have other types of businesses. So Dr. Erin O'Leary is a dentist with a couple of private practice offices, and she's asking, should each business have its own business credit card, or do you just itemize one?
So, so coming back to your point about bookkeeping, 100%, right? So as you're getting started, you can do a lot of this stuff on your own. And Jess, as you and I work together, as you earn more money, it's easy to scale then as you're delegating bookkeeping, accounting, financial, all this other stuff. Personally, it's just to answer the doctor's question, it's just a matter of preference, right? You can certainly go through and have everything on one credit card. I have a few streams of income myself, and I have separate accounts and separate cards for each one of my businesses, so that for me, it's just easier to separate those things out and at a glance see where my profits and losses are coming from in each line of business. But we see people too that combine everything all on one card and then just itemize things out based on the businesses and things of that nature, that are there. I know some people do that for points, right? They like to have everything on one card to maximize the points that they have. But a lot of credit card companies, American Express, Discover, you name it, usually lets you have multiple different accounts and multiple different businesses, and you can roll up your points all onto one. So ultimately, it's just a matter of personal preference. You can do it either way, and it's really just a matter of what you like, and also how your accountant or whoever's preparing some of your documents, what they prefer as well.
Awesome. So one of the biggest the takeaway here is one of the biggest benefits having a home-based business, I don't care who you are, is those are some amazing write-offs.
100%. We see, if you do this right, and you play within the rules of what the IRS is saying, but you don't leave them a tip, you can dramatically reduce your taxable income if you play this the right way. Right. And something else that wasn't specifically listed on here, because it flows onto a different section of the tax return. But in most cases, for individuals in this year, you can contribute about $19,500 to a 401k plan or a 403b plan through your work. As a business owner, you get the ability to contribute much more. You can actually contribute up to $56,000 in a traditional qualified plan, which is almost 3 times as much as you can do through work. So that's another huge advantage of saving for your future. But also, if you're really killing it, you have the ability to set up a pension plan on top of that, where you can actually save up over $100,000 a year as an individual, depending on your age. So that means you can actually remove $100,000 worth of taxable income, depending on your situation, because the IRS code is set up to benefit business owners. Whether you're a sole proprietor or a corporation, they want to promote business owners to run the economy, because it's the heart of our economy, right? And if you know what you're doing and you can play within the rules the right way, you can make a killing and pay a lot less in taxes than the typical individual. But if you also don't know what you're doing, you don't take the time, you can set up a lot of landmines for yourself as well if you're not educated about what you're entitled to.
Going back really quickly, Ryan, just to say, we talk about the deduction. All these things are smart ideas for keeping more of your money in your pocket. Going back to deductions real quick. So there's a couple things that are isogenic specific. So you want to get specific advice from a tax professional, because there is always the question people ask me is what I personally consume or what I'm purchasing every month, is that considered a business expense? I've heard accountants say both things. I know my accountant's perspective on it, but I will tell you that I think most of you are ordering over the minimum purchase requirement every month. Maybe they're samples, maybe they're gifts to other people, maybe they're for marketing purposes. But I'll just tell you, keep track of it. Keep track of it, however you do it. I just want to really encourage you, because when I started doing this, guys, it changed so much of what we were able to keep. The other things are, Ryan really opened our eyes to the 401k thing is a humongous deal. I had no idea. The pension opportunity here to be able to pay yourself like a business. And so, Ryan, I'm sorry.
No, you're good. You're right on this point. And part of don't only just keep track of your expenses, have documentation to back those up, right, as well. Because if your accountant wants to see that, or in the unlikely event you happen to get audited by the IRS, they're going to want to see some proof that, hey, you took these deductions in these areas. What was your rationale behind that, right? Why did you deduct it? Let's see some receipts for those to make sure you are actually doing what you say you're supposed to be doing, and all that good stuff. So great point there, Jess.
What I'd love to hear from you, I think just some other considerations that people should really be thinking about as they're running this more like a business as they start earning more money. What are some of the other things that you would really recommend that people do or think about?
Yeah, that's a good point. So, I mean, first and foremost is thinking about this as at scale, right? So if you ever sign up, if you're working with Jess's team and you join Isogenics, the simplest way is just to do it as an individual, right? You join as an individual, they give your social security number, off you go. And even on the top of this form, right, for this is what they're looking and showing for you, right? Name of the proprietor, that's you. What's your social security number, right? What do you do business at? And off we go. As you scale up and as you're making more money, some considerations are this, is that should you be a sole proprietor, or like it says here, right? Should you actually create a business and then have a separate employer identification number be associated with that? So this is where an LLC comes into play, or a limited liability company. Right. So I can only speak for Pennsylvania and the states in which we work with clients. But in Pennsylvania, an LLC is a great next step because it doesn't change anything that's on here. Right. So you'd still be taxed as a sole proprietor, but the LLC limits your liability as an individual. So it separates legally your personal assets from your business assets. So in the unlikely event you were to get sued, or there would be some sort of divorce proceedings or things of that nature that would happen, it would separate your personal assets from your business assets that are there. And that is a key asset protection. Doesn't change how you're taxed by the IRS, but it just puts an extra layer of protection on you. So that's the old thing we always recommend, really regardless of income, but if you're committed to this business long term. So if a long-term committed business is there, an LLC is a no-brainer. Super cheap to get. You can do it online. Accountants can do it for you. Attorneys can do it for you. But it usually costs less than $100 if you know your name and you know the business that you're in, which is pretty simple to do, right? So that's kind of one thing. The next step up from there is that should your LLC be taxed as a sole proprietor, or should it be taxed as an S corporation or a C corporation that's there? So I can only speak to Pennsylvania. This isn't legal or tax or business advice specifically here. Consult with your state to see what might be best here. But there's a lot of tax savings that come into play as you go from an S corporation. So one of the things, if I did get this question, which we typically do on these types of calls, is take a look at InkFile. They have a lot of great resources here that we point our clients to for business formation. But this is really interesting. So again, just being educated and knowing how our tax system works, there's a reason why Apple, Amazon, Facebook are not taxed as sole proprietors, right? And why they're taxed as a corporation. So for a lot of individuals, this is really interesting. So if you do form an LLC, right, you are taxed, and you do have to pay employment taxes on all of your income. So that's self-employment taxes, federal taxes, state taxes, and local taxes. However, if you form an S corporation, you get to split up your 1099 income, and that is no longer taxed as 1099 income. Now it will flow through a separate entity. It can flow through a corporation, and then you can split up that income into two different ways. You can split it up as a salary, which all your normal taxes will still come out, right? Your federal, your state, your local, self-employment taxes that might be there. However, you can dictate a different portion of that income to be distributed as a dividend. And now you will only pay federal income taxes on this, and you can avoid paying some self-employment taxes, which is a huge, huge deal. So specifically, there's a calculator. Hopefully it's still here. Perfect. So this calculator will show the difference of what if you were taxed as a sole proprietor through an LLC versus what if you paid yourself a salary and then a dividend with your S corporation? So let's just say you made $100,000, right? As a sole proprietor, you're going to pay self-employment taxes on that $100,000, and your total taxes here are going to be about $14,581. But what if you took that same $100,000, but instead of taking it all home as income, you had it flow through a separate entity, an S corporation, and a portion of that salary, a portion of that 100 grand, in this case, half, for example, was a salary, and the other portion was paid out as a dividend. How would that change your tax situation? Because the IRS looks at those and tax them at different rates. So the difference would be, as a corporation with a salary of $50,000 and a $50,000 dividend payment, now you're only paying $7,600 in taxes versus the 14, saving you about $7,000, right? So understanding how the tax code works and how you can play it to your benefit legally, compliantly, is another huge advantage of not only just having an LLC and being taxed as a sole proprietor, but potentially looking at structuring a corporation and being taxed slightly different. Now, caveat to that is there's extra cost, right, of running a corporation, because you got to have a payroll system. You got to have someone preparing your books for you. There's more involved to it, but there's a big savings with it as well. So generally speaking, just for people that are starting to earn net profit, right? So income after expenses, what's your net profit at the end of the day? Once you start earning 70, 80,000 or more, that's when the numbers start to make sense, because the tax savings is big enough, right, to maintain your S corporation, to have a payroll system, to pay your accountant a little bit more to make sure the books are kept appropriately for this. And then obviously once you hit 100, 200 plus, it's a no-brainer to have a structure like this set up. Not only that, your taxes, your quarterly taxes, doing that profit and loss on that Schedule C that we were talking about earlier. It just streamlines everything in a very efficient manner. But you got to be committed to it, and you got to be making enough money to have this begin to make sense. But all of our network marketing clients that are making more than $100,000 have a structure and a setup similar to this.
I love it. It makes all the difference. I mean, what a difference. What an unbelievable difference. Keeping more of your money.
100%.
And so there's a couple questions here. I think you answered the question, at what level should you be starting an LLC? And I think you answered that. If when you're committed to doing this for the long haul, you're ready to start an LLC, right?
100%. Yep.
And so what I will tell you is, if you're doing that, you do need to submit to commissions at Isagenix that you want your LLC to be paid. When we did that, we set up a separate bank account that was for our LLC. We set it to commissions and said, here's our direct deposit information for our LLC. Here's our EIN number, our tax ID number. Very simple. Very simple. It took them 2 weeks to set it up, started getting paid in that account, and it was very simple. Then someone's asking, the other question is, how do I set up an S corporation?
Yeah, so it depends, right? If you already have an LLC established, but you're being taxed as a sole proprietor, then you need to let the IRS know, right? And you need to file a form that is saying, hey, I no longer want to be taxed as a sole proprietor. I want to be taxed as an S corporation. I forget the number of the form specifically, but if you do check out InkFile, as an example, they have the form number on there. I want to say it's form 2553 is what it is, but it's essentially just a form that you send to the IRS saying, hey, I want to be taxed as an S corporation. But there are deadlines to that. So if you already have an LLC and you are currently being taxed as a sole proprietor, you cannot change this year, right? So they go calendar year, your fiscal year, which most people are taxed January 1st, December 31st. So you'll want to start considering that in the third quarter, heading into the fourth quarter, to let the IRS know and file that form so that January 1 of 2022, for the duration of the year, you will be taxed as an S corporation, because you can't be taxed both ways throughout the year, right? It's one or the other. Now, aside from that, if you are just a sole proprietor and you've never established an LLC, then you are always being taxed as an individual. So if you want to start your limited liability company and you want that limited liability company to be taxed as an S corporation, you can do that at any time of the year that you would like. As far as the IRS is concerned, Jessica, obviously I don't know what Isagenix guidelines are on that, what you can and can't do, but for the IRS, establish your LLC, elect for it to be taxed as an S corporation, and you can start that from day one, or today, tomorrow, whenever you decide to do that.
Kathy is asking an age-old question. How much should I set aside? If I'm earning $1,000, how much should I set aside for taxes?
Yeah, so it depends. Obviously, it depends how much you're making, right? So, for individuals, right, that are making, call it 100 grand, right, or so, 25 to 30% makes sense. And that's a little bit higher because when people look at the federal income tax bracket, because what a lot of people usually don't factor in is your self-employment tax, right, that comes into play as well. Because when you're working at a regular job, your employer is paying a portion of your Social Security and Medicare tax. That doesn't happen as an individual because it's just you, right? There's no company to pay that. So that's 12.6% just right there for Social Security and Medicare tax. And that's a flat tax up to $128,000 that you're making. So if you're making 100, 150, we usually say a third is a good number to put aside to be safe for. And if you're making more than that, the number goes up. One of the things I do love about QuickBooks, coming back to that, is as long as you're keeping up with your numbers, right? And if you have that self-employment version and you're entering your income and your expenses, it will calculate all of this for you. So it'll say, here's your estimated quarterly taxes based on the first quarter of what you owe, down to the dollar. But if you want to be just, estimating along the way, say, take a third, throw it aside for taxes. But if you want to be dialed in on it, get QuickBooks Self-Employed, hire an accountant, hire a bookkeeper, and they'll get that number dialed in exactly for you as it should be.
So when people are making money, then some smart things that they might look at doing with their money. And so one thing I'll tell you guys is that there's this, like, my parents would be like, oh, the stock market is really intimidating and how do you get involved? And I think a lot of people look at financials like that. What I really appreciate about this new class of financial advisor, like Ryan does a podcast that you can grab and listen to, also sends out a newsletter, and they're always talking about the most cutting edge things. So I know the bro calls will appreciate that he talks a lot about Bitcoin and about these market disruptive kind of innovative companies and investing a portion of your income in these different kinds of investment strategies. And so Ryan, will you just talk a little bit about just what you see in terms of trends like that, how people might multiply the income that they are earning?
Yeah, right. So it's tricky, right? And it's simple at the same time. So the reality is that if you don't have your money work for you after you've earned it, you're going to lose over time, like period, right? The Federal Reserve has a mandate that they're going to print 2% more money every single year for the rest of our lives. And then COVID comes, they print a lot more money. We'll digress on that for a little bit. I'm not going to go down that rabbit hole. But what that means is that your money, if it's sitting cash at the bank, is losing 2% interest a year, no matter what, if the bank's not keeping up with that. So you need to earn more than that so it'll grow towards your future. So at a bare bones minimum, we're huge advocates. If you're a do-it-yourselfer and you just don't know what to do, pick a broad-based index like the S&P 500. And then in that way, you pretty much own a little bit of every company in America. And that has shown to grow 7, 8, 9, 10% on average each and every year, depending on what time frame in history that you're looking at, right? So that's a huge win if you just throw it in, don't look at it, don't touch it as a baseline. Right. But aside from that, just to your point, I'm also a huge believer in technology and innovation. And if I were to ask you, right, what company is going to have more profits and have a bigger, future, a company like Tesla or ExxonMobil most people are going to say, well, Tesla probably has a bigger and brighter future than the oil industry, right? For example, right? So you have these innovative companies in blockchain technology, artificial intelligence, robotics, clean energy storage, that are really leading the way into the next generation. You had the digital assets like blockchain and cryptos. So, if you're going down that rabbit hole, those are great sectors to look at if you really love that stuff. But we also too just believe in a simple, easy, low-cost way to get exposure to the biggest, baddest companies in the US is a great way to get started. And then really making sure you're aligning your beliefs as well, right, with your investment portfolio. So, we spend countless hours optimizing, right, what we do for our clients and our personal portfolios. So we don't have near enough time to dive into all that stuff. But if you just want to get started, check out the Vanguard S&P 500. Is a great way just to get started to begin learning about investing. It's practically free also these days. But then, just seeing what else is out there that you align with. But we're huge believers in innovation. We're huge believers in blockchain technology. And it's really going to change the world in our humble opinion.
And I personally, I've watched that do some amazing things. And if you would have told me 10 years ago, we're going to invest a portion of what we're earning and start companies that are doing artificial intelligence, I would have thought you're crazy. But I'm consulting with experts that are finding these companies and they're doing unbelievable things that are mystifying. So that's one thing that I'll say has been really exciting to me is you can take your money and multiply it. And that's such a cool thing. The other thing I want to understand, I think people really want to know is what are some things that if they're looking for a great financial advisor, what are the 2 or 3 questions that they should be asking to really vet someone? What have you found them to be the best questions they should to interview people?
Yeah, really good. And actually, I'll point out 2, but I'll also pull up my website here because we have this because this is critical. So here you go. So I'll send out a link to this article afterwards, but NerdWallet, we do a lot of work with NerdWallet. This is a great article, 10 questions to ask a financial advisor when you're interviewing them, right? And it has a few great things on here to take a look at and also links out to different types of things. So Jess, I can send that to you to forward out. But the biggest thing is, are they fiduciary? So believe it or not all financial advisors need to be a fiduciary. So what is a fiduciary? Someone who works in the best interest of the client. So meaning we're putting our client's interests first. A non-fiduciary only needs to recommend products that are suitable. So this would come into play for an advisor, for example, who represents an organization or a company that has proprietary products, or they might get paid to push a certain product to a client that might not be in their best interest, right? That might be suitable for them, but they might be getting paid bonuses and getting a trip to Maui for selling this investment or this insurance policy versus one that might be more cost efficient or better for you. So first of all, is an advisor acting in your best interest, or are they selling products to you to make commissions off of? So that's the biggest thing. And then the other thing is how they get paid, right? So where their interests lie and how do they get paid as an advisor for that? Are they getting fee only? So for example, I'm fee only as an advisor. I get no commissions. I get no kickbacks from the programs that we recommend. It's a flat, easy, transparent fee. In my past, I was with firms when I was getting into the industry that sometimes I was charging my clients a fee. Sometimes I was getting a big commission, and then I was getting a kickback again on the backside. But I actually didn't have to disclose any of those items to any of our clients because it wasn't necessary. The regulators didn't require us to do so. So that's the thing. Are they fiduciary? Are they getting paid? And what's their experience like? It's kind of crazy, but you can actually sign up for an online class, take a class for a month and sit for a 2-hour test and get your license to be a financial advisor. There's no education requirement. There's no experience requirement. The government and FINRA, who's our regulating body, has it set up that pretty much anyone who wants to be a financial advisor can be a financial advisor. If you pay an online fee, you take a month out of your week, take a 2-hour test, and you're smart enough to pass. So be aware of those things. Definitely take a look at this this site here from NerdWallet. We've done a lot of great work with them about providing financial literacy education to clients across the board and people that just follow us. So fiduciary, how they get paid, experience and expertise.
Ryan, what's the free assessment there that is on your screen?
Yeah, so it's a good question. So we provide free assessments for anyone who is just wants clarification that they're on the right path financially, or two, that might be just interested in working with us and they're looking for advice and looking to partner with us. So me and my partner Fran Walsh provide free assessments to anyone who's looking to get advice on how to reduce their tax bill, how to make sure they're on track for their financial independence, and how to optimize their investment portfolio. So whether that's working with us directly or just letting them know they're on the right path, it's a free introductory to our firm that we offer.
Janelle's asking, should your financial advisor be in your state?
That's up to you, right? So I'm based in Pennsylvania. We work with clients in 19 different states now. Last week, we picked up a client in Utah and Oregon that I've never met in person, right? So I would say as long as your advisor is, in my personal opinion, tech savvy enough to meet with you over Zoom, you can verify their credentials. They don't have any client complaints or outstanding bankruptcies or any funny business going on, which all that stuff is publicly disclosed on our regulator's website. No, I don't think your advisor needs to be in your state as long as you're comfortable meeting with them virtually. Obviously, if you want to sit down with lunch with them, go to their office, then yeah, they should be local. They should be close.
One thing that I will say as you guys are looking at accountants, bookkeepers, financial advisors, I think that the question that I'm so glad that I asked was, do you have experience with home-based business, people that have home-based businesses, and do you understand network marketing? And if someone doesn't align with this industry, if they have any kind of stigma, that is an energy I want so far from my business. Like the fact that Ryan cheers for our posts, the fact that he's referred me to people, like you want someone who supports this industry, not someone who has some jaded perspective of network marketing or whatever it is. You want someone who's, and also you're hearing from, I think you're hearing from this, there are some very specific nuances here. You want someone that really understands. Can we write off our personal BV? What do samples look like? Can I have a car in the name of my LLC? Like you want to really somebody that understands those things. And by the way, the answer to the car question is yes, you can.
Yes,
like
100%.
Doug and I have a vehicle that's in the name of one of our businesses. And I will just tell you like that. Do you know what that means then for having that car, the insurance? There's so many major advantages. So I just want to encourage this team as we have so many people that are creating unbelievable, extraordinary incomes. Drop a 1 if you've been amazed at how much you've been able to earn here. Drop a 1 in the chat because I hope that you feel that what you're doing is so unbelievably game changing for your income and families. But when I was talking to some people and they were asking me some questions, I just thought, gosh, if I would have known some of what I know now when I started this, we would have kept a lot more money. I would be in a way better position. And so I wanted Ryan just chat with you just about some of the questions that people have, and whether you're just starting or you're like, holy moly, I can't believe how much I've been earning. There's some important, it's not for people like me, this and Ryan knows, I run from this. I'm like, oh my gosh, even when we're making a lot of money, I'm like, I don't want to know anything about it. Like, it's so boring. I want to go out and recruit people and develop leaders. But this matters. Keep your money, multiply your money, go out and make impact, go out and use this to go change the world, dream so big. And so, Ryan, I'm so grateful for you. Are there any other, look at Carrie Sweeney. I mean, there's people on this, Ryan, I just want to honor real quick. Carrie Sweeney paid for 2 family vacations this year. She was someone who has this extraordinary story of how this business completely changed their family's financial situation. She's a teacher in New Jersey, mom of these awesome kids, and she treated them to dream vacations just with income.
That's awesome.
So special. And so many people have stories like that on here. And so I expect that Ryan, you've looked at some of the trajectory of what we're seeing. I expect this is the beginning of the runway. I expect it to completely just the new things that are happening just catalyze growth. And so many more people are going to be creating income that blows their mind, that your parents won't believe the kind of income, your spouses won't believe it. And frankly, when you look at your 1099, I truly can imagine you looking with such incredulity just to say, I earned that money. That's what I've actually earned. So I'm so excited about it. Are there any other questions for Ryan specifically around this? Awesome. All right, guys. Well, make it an amazing week. Ryan, thank you for joining us.
100%, Jess. Thanks for having us. And obviously, if you guys want to follow us, check us out on Instagram. We got a podcast as well. Check out our website. And literally no pressure, but if anyone does want to take advantage of free assessment, get our opinion on how awesome you're doing or where you can maybe improve, head over to our website, opulus.us, and let us know how we can maybe help out.
Awesome. Thank you, guys. Have a great night. And Ryan, we appreciate you so much.
Awesome. Thanks, guys. We'll see you.
Take care.